So I feel we're going to see this upward trend in price, the rest of this year and going into next year. I think it's important to see that because going into the halving, there's a lot of nervousness on profitability. And if the Bitcoin price does not recover even further from where it is, there's going to be a lot of challenged miners out there.
Hello and welcome to the Bitcoin Magazine podcast. I'm your host, Spencer Nichols, and today we're going to sit down with James Macedonio from Blockstream to talk about the upcoming Bitcoin halving, some dynamics in the mining industry, and what Blockstream has been building in the bear market with their new basic note product for investing in Asic Bitcoin mining rigs. And I think James is going to be a great person to walk us through what to expect as we come upon the halving and kind of the state of the mining industry. And James is Blockstream's global head of mining sales and business development. So he has some great insights into the state of the ecosystem as far as deal flow, but also from an operational perspective, trying to understand some of the technicalities in mining. So we're really lucky to have James with us here today. And so to kind of set this up, we're speaking just shortly after Halloween. We're approximately 170 days away from the halving. And after a grueling bear market and the hopes that Bitcoin winter may be thawing on the heels of a potential spot ETF, many are wondering, what is next as we approach the halving? And so James is here today to give us his thoughts and update us on what Blockstream has been building in the bear. So without further ado, James, welcome to the Bitcoin Magazine podcast. How are you?
Thank you, Spencer. Yeah, I'm doing very well, and I'm excited to have this conversation.
Cool. Yeah, James. So thank you for joining us. I think before we kind of dive into the technicalities of the halving and kind of what Blockstream has been building in the bear market, I think it would be good for our audience to get a sense of what your background is, what you did before working for Blockstream, and then also tell us a little bit more about what your day-to-day is like at Blockstream.
Absolutely. Thanks, Spencer. I have a very diverse background. I primarily came from Wall Street. I've worked for many of the large organizations that people would be familiar with, like Bear Stearns, Credit Suisse, Morgan Stanley. I started out back in the early 90s, bringing Windows to the trading floor. So I typically follow the most disruptive technologies, and it started with Windows. And then I moved into building electronic trading platforms, low latency, high frequency systems for trading that service dark pools for these organizations. And then when I finished all that, I said, all right, what is the next best disruptive technology? And it was cloud at the time. So I ended up moving over to AWS, Amazon's AWS practice, and spent 6 years over at Amazon. And then from there, I started talking with Adam Back, and he's asked me to join Blockstream, and I thought it was a good fit with my technology background and me following the most disruptive technologies. And Bitcoin and cryptocurrency is the next wave. I'm feeling.
Got it. Yeah, no, I mean, it sounds like you are someone who likes to be ahead of the curve. And I know before we got on camera here, you were talking about how when you were working in the cloud industry, as soon as it became kind of a standard or mandatory practice to have cloud operations, you were like, okay, that's it. That's on to the next thing. And I think, maybe I'm a little biased, but I think moving on to Bitcoin was probably a good call there. It seems like you were ahead of the curve yet again.
Exactly.
But yeah, I guess, now that we kind of have talked about that a little bit, could you maybe provide a little bit more color on what it is you're doing at Blockstream as far as your day-to-day?
Yeah, I'm responsible for the sales organization and the business development organization for the mining practice. So that includes working out the products that we're selling, the pricing. I also get involved in looking at new facilities. I look for energy around the globe. And then structure the products around that to bring it to bring to market. So I have my finger in just about everything that the mining practice offers. We're also involved in helping structure some financial products like the Blockstream mining note, the BMN, and most recently the ASIC note we have, which we're calling Basic Blockstream ASIC note. So yeah, a pretty wide set of responsibilities here at Blockstream.
Okay, got it. Yeah, and so I think given your understanding of like your operational expertise when it comes to mining, but also your understanding of kind of the state of the industry when it comes to deal flow and also just energy pricing and availability in different geographic locales, I think those are some things I want to try and tease apart as we kind of give people a sense of where the industry is now and kind of how, especially things like the halving, but also the recent price action are going to kind of impact everyone's outlook going forward. So I think right now we've kind of had a bit of a bipolar impulse in the market. It's also exacerbated by Bitcoin's illiquidity. I mean, everyone's hodling, so there's no coins coming onto the market, and seemingly a single tweet can move the market cap billions of dollars in seconds. And I'll just say, like, I myself like vacillate between it's so over and we're so back on a near constant basis. And not that it changes my behavior, but it's a little exhausting. So I got to ask, like, just with the recent price action we've seen, are we back or is it over? And what's your take on where we're at in the cycle? I know that's not an easy question, but figured I'd leave that one there for you.
Yeah, that's definitely a loaded question, but I definitely feel like we're on our way back, and we're not back yet because we got a long way to go. But I think seeing the prices down at 15,000, I think we're not going to be there again, right? We're sitting roughly around 34, 35 now, and I'm hoping to see it break 40. So I feel we're going to see this upward trend in price, the rest of this year and going into next year. I think it's important to see that because going into the halving, there's a lot of nervousness on profitability, and if the Bitcoin price does not recover even further from where it is, there's going to be a lot of challenged miners out there.
Yeah, absolutely. And I think something that's on my mind is what is that cycle going to look like? Is it going to be, as we hit the halving overnight, you're going to have like, say, 30% of the hash rate go offline? Or is it going to be kind of a war of attrition where you see who can take the most pain? And then you kind of have maybe a consolidation after that. So like, how can we kind of think of that dynamic as we approach it and then surpass that halving mark?
Sure. I think we're seeing increased hash rate now, mainly due because the large public miners and even the private miners are refreshing their fleets with the most efficient machines. So as we see that happening, it's bringing on additional hash rate. We're also seeing new capacity, to plug in miners that have been sitting in closets for a while. There's been an oversupply in a secondary market of miners because of some bankruptcies and because of the bad market. It's taken a while to actually develop the new capacity, including ourselves, right? So now, as we're starting to see new capacity come to the market, some of these miners that have been sitting on the secondary market are being plugged in addition to seeing the more efficient machines being put out there as well. So that is what's driving the increased hash rate.
Yeah, so like as far as how many rigs are coming off the shelves and being plugged into that newly available energy, like how large is that oversupply? Or I guess depends on your perspective whether or not it's over or just an adequate supply. But yeah, like I've heard people say that there really is like kind of this wave of machines coming on. Can you speak to that a little bit?
Well, I can't give you a quantity out there, but I do know it's a large amount. I know that the demand for capacity, just our pipeline alone has always been pretty full. Right? Typically we have demands upwards of 200, 200 plus megawatts just constantly there that I can't fill. So I'm assuming other providers are in the same spot. You have manufacturers now getting into to putting machines online, like look what Bitmain has done recently. They partnered to bring on 27,000 new machines, right? So if they can't make money manufacturing because there's so much on the secondary market, I guess the next best thing is to plug them in, right? And create a yield on what they already own. So I think that that is gonna and that they're bringing on a bunch of additional capacity to service those 27,000 machines that they're putting on. We are Blockstream ourselves. We're bringing on 200 plus megawatts next year, right? To help meet the demand that we expect, that are already here and we're expected to come. So we don't see the hash rate dropping just yet, right? I think it's going to continue climbing. Adam Back and myself kind of feel that it would probably going to be sitting around the 600 exahash range.
Oh wow!
By halving. Right now, I think it's about 450. And that that's going to actually is going to also put some concerns on the people mining if Bitcoin price is not if it drops any lower than where it is today already, right? So we're expecting the hash rate to increase around that level, but after the halving, we'll probably see some of the existing miners who don't have the capital to refresh their fleet find themselves in a not profitable spot if Bitcoin price is not upwards. I would say it's got to be around the 60-ish. 60. If you're mining for yourself, it's one, but if you're hosting, you're gonna be paying a different rate. So if it's not upwards between 60 and 70, I think it's going to be challenging for some of the folks that are just hosting and not vertically aligned and mining for themselves.
Yeah. And like on kind of this thought process of how do miners adapt to these changing conditions, I think, like I mentioned before, there's some people that are, kind of praying for this spot ETF to get approved, and then also subsequently that the price goes up because of that. And so how do you think the industry is thinking about these kind of these binary outcomes? Say we crab market for another couple of years, or we have like a very sharp appreciation. So I think it's kind of tough. You have to be like ready for price to run up, but you also don't want to get caught offside. So how can we think about that?
Well, I think the spot ETFs are going to do wonders for this industry. I think there's been a lot of bad characters in the past, right? And with spot ETFs coming in, you're having large players like BlackRock playing in the game. They have a tremendous amount of influence on policy and stuff. And even although nobody wants to see regulation, right? I think some regulation may actually gain some trust of the folks that don't want to play in this space. And seeing some of the large players getting into spot ETFs will also further the trust in playing this space, which I think will do wonders for BTC price.
Yeah, I definitely think there's like both the social acceptability side and then also just the pure market behavior. But I think like the former is honestly more important, especially with an industry that's so tied to energy like Bitcoin mining. I mean, you had Larry Fink and BlackRock were kind of the progenitors of the ESG investing kind of mantra. And now that they're coming out and Larry's calling Bitcoin a flight to safety. I think Mohammed El-Erian has also said similar words. Not that he necessarily holds that opinion, but he's reiterating that same tagline. So I think that's very validating. And then also, I guess from like the environmental part of things, I think that's becoming an increasingly important conversation. I know there's been regulation coming out or talk of regulation about AI's data centers and their energy use. And what concerns are around that from both the environment and grid stability. Do you have any thoughts on that matter? Like how, first of all, Bitcoin mining relative to AI, but also like how the two might integrate. I think that they might have some interesting crossovers. I know some public miners are entering the AI GPU space as well. So curious if you have any thoughts on that.
Yeah, we definitely do. AI and mining are very, they have one common element, and that is cheap energy, right? So a lot of miners out there looking for the cheapest energy, and if they find it, they serve as a dual purpose, right? They can mine, and if the demand there is not for mining, it creates somewhat of a risk strategy, right? If for some reason mining demand is not there, you can easily refactor we have modular data centers. It's small. We don't like calling them containers. We can refactor them easily to support co-location for GPUs.
Yeah, and on that point too, like is there a symbiosis between Bitcoin miners and the GPU, I guess, calculations for these AI implementations? So I'm kind of thinking you have Bitcoin miners that would run when there's not, somebody pinging the AI to run a computation, and then, when that computation gets called, then you'd spin up the GPU and shut off the ASIC. Um, do you think that that is a valid way to look at this, or is it going to be more binary, like you do one or the other?
I think at first we're going to see it more binary, right? Right. People either going headfirst into Bitcoin mining or seeking out GPU capacity, right? Now you can take it even further, right? Not only just offering co-location for GPUs, but then you can offer actually GPU as a service, right? You can offer the actual compute cycles. So, but it starts with finding the cheapest energy and creating cheap I guess, facilities that don't necessarily need the redundancy that some of the larger providers out there have, right? If you think about AI, training AI, why not seek out the cheapest place to train, and then if you want to move into production, then you can go into some of the larger providers where you have these highly redundant data centers at a much larger cost to run your production. So I think you'll see a lot of AI training being moved to cheaper facilities that similar to what some of these large miners have the ability to do, because we're already doing that. We're looking for these farms to just build out infrastructure.
Yeah. No, I think that also it's going to be interesting to see like how the social acceptability of AI versus kind of the social acceptability of Bitcoin mining, how those two kind of compare to one another. I mean, I think, myself, it's something that kind of irks me, is, the unfortunate PR case of Bitcoin for many people. I mean, I think, being lumped in with certain aspects of crypto is not a great look. And so I think it's going to be interesting to see how people treat regulators as well, treat the energy usage from AI versus Bitcoin mining.
Yeah, that would be interesting. I mean, there's a lot more education and knowledge, or let's just say marketing around AI, right? So the general public sees the benefits and also sees the fears coming, right? There's also a lot of fear around too much AI, right? Just getting a little in front of human intelligence. But yeah, and I think there's a lack of knowledge on mining and the benefits mining can bring. So, but the one big difference I think between building out from an AI infrastructure as opposed to mining is AI. It would be more difficult to curtail that environment as opposed to Bitcoin mining. It's easier for us to just shut down and not worry about the impact of shutting down if you're running, as if you're running AI cycles, or it's not so easy just to shut down. So so I don't see AI being they'll be consuming a lot of energy, but I think it'd be much more difficult to leverage them to balance the grids, right? So the energy providers are going to have much more of a challenge to say, hey, can you shut down all your GPUs for 5 hours?
Yeah, and they're going to say no. We're mission critical for our customers. We need to be up and running.
Yeah, I'm not saying it won't happen, but it's going to be more of a challenge.
Yeah,
there'll be a lot more flexibility with the Bitcoin mining, but because of so much similarities in finding cheap energy and the way you can build out the infrastructure for it, I think they should be going hand to hand.
Yeah, totally. No, I appreciate you entertaining that little bit of a tangent there. I think it's something that has kind of caught me off guard a little bit. Like AI is really, really taken off. So I think a lot of people are curious about that. But I kind of want to bring things back a little bit more closely to mining and what you're doing at Blockstream. So I know, building in the bear market's obviously a theme. People have been grinding and trying to see what's going to come to fruition. And so I just kind of want to give our audience a sense of kind of what Blockstream's bread and butter is when it comes to your mining services, and just kind of walk us through kind of what you guys have been working on. I think people are always curious to hear what the team at Blockstream's been up to.
Yeah, we stay pretty stealth on purpose, right? We do ourselves for the most part, but yeah, during the down period here, we're seeking new facilities, right? Cheap energy, and going through trying to negotiate the best deals and the contracts and so on. Also, we've been fundraising as well, right? These facilities that we build out are capital intensive, and finding capital over the last 12 to 18 months have been very difficult. In addition to that, we're going to be releasing a Blockstream Minor, Asic miner, and we're expecting towards the end of 2024. Obviously, right now is not the right time to releasing a miner with the deflated prices of ASICs, right? And I believe they're most likely below manufacturer cost because the oversupply in the secondary market. So we're going to be timing it right. We're expecting the ASIC prices to go back to being highly correlated to Bitcoin price, and seeing a fast increase in the ASIC prices when Bitcoin prices go a little further up, and after the halving as well.
So could you elaborate a little bit on that ASIC machine that you guys are putting out sometime next year? I think people are super curious.
Yeah, no, it's we're gonna do somewhat of a different form factor instead of what everybody's been calling the shoebox, right? This is gonna be a rack mount, so we can leverage standard data center rack mounts. It's gonna be a blade server, and we can put blades in the chassis. So it's gonna be much easier to upgrade, right? You don't have to upgrade the backplane and the chassis. You're just upgrading the blades in between. And so it's going to be less costly to refresh, and you're also going to be able to leverage standard data center equipment, which I think also goes hand in hand with AI.
Right. Yeah, totally. I mean, I think the commodification of this industry is something that kind of a scary word for some people, but I think it's also like a necessary thing that's going to happen sooner rather than later. So yeah, I mean, I think there's kind of been some people that are a bit irked about the inconsistency of some of the ASIC manufacturing, and I think having something that's even more modular and standardized alongside other standard practices in the data center industry, I think is going to be a great thing. And I mean, obviously, Blockstream has so much goodwill amongst people in the Bitcoin space. I think everyone's really excited to see what you guys put out.
Yeah, we putting out an ASIC is very complex. Other companies have tried it, but we bought a company called Penduli's. It's an Israeli company. I think most people in this space should know of them. And they have a lot of experience and history in building ASICs. So I think we're ahead of the game by most, just trying to jump into it the first time. So we're excited about that. I think a lot of folks are excited about just having another option in the industry, right? Because they have two main players right now are dominating the market, and just having maybe a North American company, we're a Canadian-based company that basically putting out a miner, I think would be a big deal.
Yeah, definitely. I think given kind of the geopolitical, status of things with China and kind of all this hoopla over semiconductors, I think from a strategic standpoint, I think that makes a lot of sense. And I also think it would be helpful for our audience if you could kind of give a rundown of what we've seen for the price of ASIC machines. I know you guys are kind of targeting this 2024 release for the machine you just described, and so I mean, it would be beneficial to you if prices had increased for ASICs. And so I think that could also lead us nicely into this basic note product. But yeah, first of all, what does that market look like? And maybe I know you had a chart you wanted to pull up that might be a little helpful as well.
Yeah, the ASIC prices have been deflated quite a bit. Let me see if I'll share a visual here. This is Luxor's ASIC pricing. And anyone can pull this up. It's not proprietary to Blockstream. But if you notice, this is historical ASIC pricing to Bitcoin, right? What I have done is I've extracted all of the. I'm just looking at the more efficient machines, the machines that are 25 joules and under, and then 25 and 38, those ranges. So you can see the Bitcoin and the ASIC prices are highly correlated until we got to the fall of last year. right about this point here. And Adam Back and I had a discussion around October and November, saying that we see a break in the correlation, and we anticipated this as well because of the oversupply in the market, and some of the failures in the industry. But that some of the bankruptcies that went through, we knew the market was going to get flooded with ASICs and continue driving the price down. Even if Bitcoin goes up, the oversupply was going to keep the ASICs down. And that's our thesis has been proven out since that point. And you can see the orange and the red line. The red line are the more efficient machines, and the orange are the the ones between 25 and 38. And you can see Bitcoin is continuously going up, but the miner prices are going down. And what's surprising is even the more efficient machines are going down. They're going down faster in the most recent months. And that's because we feel there's a price war going on between the two primary manufacturers. The new releases that they put out are just driving the prices down. So I think this is just gearing up for a huge price correction. If you think about the height of the ASIC pricing, I think it was somewhere December 2021. I think it capped out about $120 per terahash, right? And now the same machine, you're looking at $10 to $12. So it's more than 10x less than it was. But Bitcoin price is roughly half of what it was. So the X factor, what was highly correlated until last year, is no longer correlated. So if this correction comes, where there's financing out there for people to go out and be able to finance miners, the price war is over, right? The Bitcoin price going up, people are less worried about spending on miners. I think we're going to see a major shift of the ASICs going back to where Bitcoin, where it's correlated with Bitcoin. So we're expecting the basic fund is really a fund that would take advantage of that, the opportunity behind that. It's a Bitcoin on Bitcoin investment. So we feel that people are sitting on Bitcoin. If they invest in this fund, they can see a larger X factor on their return. And in our fund, there's only a carry if we beat the Bitcoin return. So we're betting on that as well. So we think it's just a great opportunity to take advantage of this price correction that's so obvious coming. We don't think the ASICs can go cheaper. I mean, they're almost giving them away at this point. So yeah, we think it's a great opportunity.
Talk a little bit more about that basic note and how that product is structured, and who that's available to. I know there's some stipulations around being an accredited investor, et cetera. So who do you think this would be well suited for in the market? I know perhaps maybe a miner would want to take a look at something like this. Who knows?
Yeah, well, Series 1 we just closed, and you can find it on Stoker, STOKR site, and also on our Blockstream.com site you can see it as well. But Series 2, I believe we're going to be opening up for U.S. investors, and there is a minimum investment of 115,000 USD, and we're probably in the next few weeks going to be opening up Series 2.
Got it. Understood.
Yeah.
And in terms of how you think this market is going to play out, and also how this note functions, obviously you have this delineation between the under 25 joules per terahash and then the 25 to, I believe it's 38 joules per terahash. Do you see those two, I guess, subsets of the machines being highly correlated, or do you think as we approach and pass the halving, that a more efficient machine would outperform on a relative basis?
Well, there's in the beginning, we're going to be looking at the most efficient machines we can get our hands on, right, and just stockpiling them. We're not going to be turning the machines on. We're going to be looking for new machines, the most efficient machines, and just warehousing them. But as Bitcoin price goes up, it may create different opportunities especially with what's on the secondary market. Some of these machines that are on the secondary market will not be profitable post halving, but if Bitcoin is sitting at the 60, 70 range, they become profitable again. And if they even they go, if we break 100,000, then everybody's going to be looking for all the machines that they were looking to get rid of a year earlier.
Yeah, turn your S9 back on.
Yeah, exactly. And we feel there's going to be a huge chip shortage in the industry. So if Bitcoin does go on a bull run, which we're expecting, people are going to be running for everything they can get, and they're just going to create even a greater demand on chips, which would make it would be harder to get.
Could you talk a little bit more about that chip shortage that you guys foresee? What is causing that? Is that something typical that happens in the price cycle? That's kind of the first I've heard of anyone flag that.
Yeah, if Bitcoin goes on a bull run, it's going to be highly profitable to mine, and and as people realize the profitability behind mining, there's going to be a huge demand on miners, ASIC miners, and it'll be hard for manufacturers to keep up with it, and then just the shortage in the industry, we feel like it's going to be just chips in general. There's going to be I don't want to say a war going on between putting them in iPhones or using them for ASICs or these the fabs that actually produce them. So the chips are already the chip demand, not only from the mining perspective, are increasing through the roof. Chips are going everywhere, right? You're finding them in your appliances at home. You're finding them everywhere. So the demand for chips and to manufacture these chips are going through the roof. So if the demand for mining, if the profitability of mining goes to where we expect, we think there's going to be huge demand for ASICs, of which we're going to find more constraint on the chips, which will drive the price way up as well.
Yeah, understood. I think that's really interesting to consider. Like, you do have, I think, this constraint on chip manufacturers, both, like I mentioned, from the geopolitical side of things. I think that's just becoming more fraught. But then also you just have increased demand across all parts of the economy. And so when you think about the constrained, I guess, capacity to produce these things, perhaps like ASIC chips have been crowded out of that market a little bit. They're going to people like NVIDIA or whomever. I think that could potentially be a bull case and a tailwind for, say, these less efficient ASICs that people might have already, counted out. They're like, those are done for. We're in the bear market. The halving's coming, and I think that could be an interesting space to watch, in my opinion.
Yeah, so that's another reason why we're breaking up the basic note in series, right? So we can take advantage of different. First of all, the different timing behind opening and closing a series, right? So if we're Series 6, Series 7, and opportunity still exists next year, if we see the Bitcoin price go up, maybe we consider some of the less efficient machines because they'll be in demand again. Right? If we're seeing 100 plus thousand, 100K or more on Bitcoin price, then even the M30S pluses are gonna be profitable to plug back in, right? So it's you got to watch the correlation between where the Bitcoin price is and what's on the market and what the profitability will be, and then also the capacity, right? Is there enough capacity to plug these units in? Because capacity seems to drive very quick as soon as it comes on. There's still a huge demand for it. We're gonna be bringing on 200 plus megawatts last year, and I don't think it'll be that complicated to sell out that capacity because of the demand we see on the street.
Yeah, I think that can be a nice segue for taking us into a forward-looking conversation about the Bitcoin market generally, and then also where you see the mining industry going in the mid to longer term. So I think to kind of put a bow on this conversation around Bitcoin's price, I know Adam Back has been incredibly bullish on the halving, and he's not alone certainly. But I'm curious if you have any difference of opinion compared to Adam. Where you think the market. I mean, who obviously knows, but where you think it could go. So very curious to hear your thoughts.
If we had a crystal ball, it would be a different story. But Adam and I are pretty aligned. He and I speak often during the week, and we both are in agreement that we see Bitcoin, potentially Bitcoin could be at 100,000, by the halving. And then even see 4 to 6 months after that, even see a bigger bull run on it.
Hmm. Yeah, so
we're very bullish on Bitcoin, and where we expect this to go.
Yeah, no, I'm with you. I mean, I think I almost forgot it could go back up at a certain point, like after what we went through this bear market. But I think that people are questioning whether or not this 4-year cycle for Bitcoin is really what's driving the price action. We have obviously the halving every 4 years, but that's also coincided with an increase in liquidity in the broader economy due to macroeconomic factors. And so I think that's what's on my mind is this a coincidence, or is the halving driving Bitcoin's price appreciation? And I think on the latter note, it's also interesting to consider, is it more psychological than simply the amount of supply? Like, it's like, oh, people realize that Bitcoin is, I guess, quote unquote, becoming more scarce. And it's less so actually like a function of how much miners are selling, if that makes sense.
I think it's a combination of all, right?
Yeah.
I don't think it's one factor at all. I think as the general public gets educated on Bitcoin and it being a store of value, right, it can be an alternative to gold, right? The more and more they're hearing things about it, and the general public want to get into it. We have companies that service the retail market, which make it easy for the general public just to get into the mining themselves, right? Or just the whole Bitcoin. You got ETFs coming, right? And there's going to be a lot of education that the BlackRocks of the world are going to put out, right, to educate their investors. So the general public is becoming more accepting of it, right? And I think that's going to help drive the price. I think the halving is going to drive price. And it's just a combination of everything above you just spoke about, which I think we're gonna see. The scarcity of it right now. As we're getting more scarce, people are like, oh, I better get in and get my piece of it before I can't, right? So I think that is driving it up as well. And we see this continue going that way.
Yeah. And I think that piece of 100,000 by the halving might kind of differ from what people had seen in previous halving cycles, where normally, as far as more that price appreciation takes place after the halving.
Yeah.
And obviously, there would still be room to run after 100K. But I think that there is kind of this like reflexivity of people being like, okay, what is the person across the aisle from me going to do? And how should I react based upon that information? And so I think that we could see an acceleration and a compression of this cycle towards the front end, which would be, I think, a bit different than we had seen previously.
Yeah, I think one of the challenges is if you want to get into this at scale, it takes time. This is not something you can say, hey, 2 months earlier, I decided I want to do this, right? If you want to get into this at scale, you have to be planning this out, well in advance. If not, number one, because waiting for capacity is typically what you're looking at now. Waiting for the miners from the manufacturers are 4 to 6 months out, right? So if you're making a decision today, you're probably not going to be looking at adding any kind of significant capacity until the spring of next year, and that's leveraging someone else who's already building capacity. If you're thinking about building your own capacity, you're 18 to 24 months out, right? So there is some barriers to entry, from a capital perspective, and is also from a time perspective. So you have to kind of make a bet now, and not wait until after the halving, where you almost missed it. Well, you're not missing. You miss an opportunity. So and because we're so bullish on this, Blockstream, we're in the process already of building out 200 plus megawatts to help service the demand that we're expecting to come. That's already here, and we're expecting to come.
Yeah, that makes a lot of sense. I'd like to take this conversation and talk about how you see the mining industry changing in the longer term, and trying to understand, where we see mining going. I think the age of the mega miners has really been, what we've gone through recently. We see these gigantic facilities, and predominantly in Texas. I think that's been something that people have been following closely. How miners are interacting with the grid. ERCOT's been in the news, obviously. But I think that there are some people calling for kind of a re-decentralization of mining, both in terms of how large these sites are and then also the geography where this is taking place. So I think it could depend upon a lot of factors, but what's your kind of base case for where you see the mining industry going overall?
Well, working for Adam Back, who is in the white paper and actually is the father of mining and created the algorithm for proof of work. Decentralization is something we continuously focus on, right? Although Texas is the cheapest place to build out facilities, and a large portion of what we do is in Texas, but we're continuously looking around the globe. We've explored sites in Paraguay, in East Africa. We looked at Australia, New Zealand. And we'll continue the strategy of looking at geo diversification, as well as looking at what we're calling microsites, right? To leverage some of the stranded energy that you find that won't support a larger footprint. And one of the things we're working on is trying to find ways to optimize the operational component behind that. Whether we the way we're building out our modular data centers, so they can almost self-operate and not need a lot of attention, which is huge. So we can drop them anywhere in the world and not have to worry about servicing them as much as we would, right? So as we innovate and develop those technologies, makes it easier to pursue the microsites. But that is part of our strategy, is to diversify globally and to focus on some of the smaller sites that that have stranded energy.
Yeah, absolutely. And I was speaking with Adam Swick of Marathon a couple weeks ago, and kind of what they were talking about is they're kind of looking more into mining on landfills. I think just today they announced their first pilot project mining Bitcoin on a landfill using the methane that is generated from that. And I think, like you said, one of the challenges of these smaller sites is how do you have it so you don't need somebody on site 24/7? Like that's cost. So I think it's interesting to see the confluence between renewable energy, which is obviously very geographically distributed and not necessarily near a demand center. How do you service those facilities? And then I think that is kind of leads you into how do you service a remote Bitcoin mining facility? And I think there's probably a lot to be gained from knowledge from both the energy side and the data side on that.
Exactly. Yeah. No, I'm pretty close with Marathon. I think they're an amazing company, and I speak with them, those folks over there quite a bit, and I think they do a great job. Our strategy is very similar. Is to find ways to distribute it as much as we can without significantly impacting the operational cost. And we do have ways to do it. We're just we're not ready to announce it just yet.
Okay, understood. Well, I'll keep my eyes peeled. I'm curious to hear what y'all have to say. But on that geography question, are there any I guess locales that you think have come around to Bitcoin that you might have been surprised to see? I don't know. I just in my head I'm thinking through the U.S. has been marginally more hostile to Bitcoin mining than I had anticipated. It's certainly from state to state it will vary. But are there any places where you're seeing people take a second look at and say, maybe I should go talk to them as they seem a little bit more open to it?
I think, yeah, well, Marathon's employing a strategy to go in Middle East, right?
Mm-hmm.
I think they're embracing it quite a bit, and I think that's worth a look, in that area. And one of the concerns going into a different country is the political landscape, right? You don't want to put all the infrastructure costs and set up operations, and then all of a sudden get shut down. So it does take time to get close enough with the politicians or the governments in those the particular places, and to ensure that you have some longevity behind operating. And I think the Middle East is one area that is actually really digging into this.
And why do you think that is? Is it just a question of the energy that they have available, or is there something more to that from like maybe a political or social standpoint?
Well, I think they really want to become a large financial sector, right? And they see it as a way to gain popularity and bring economics and finance to their area.
Yeah, I mean, I think it's a little bit of a trope in Bitcoin, but people talk about game theory all the time, and I think that that could be an example. Is like that the incentive is there, and someone's going to claim it. So I think politicians who Elizabeth Warren might want to take note of that. Um, yeah, and then also in terms of just the energy landscape, do you have any thoughts on how that may unfold and how that might intertwine with the energy or with the Bitcoin mining industry? So, like somebody like Lynn Alden often talks about kind of this structural undersupply of petroleum-based, whether that's natural gas or crude oil, and what that might mean for energy infrastructure going forward on a longer term basis, and that kind of intertwines with the environmental question as well. Um,
Yeah.
but I suppose, in the medium to short term, do you have any outlook on energy generally? I think as we, enter this winter again amidst this conflict with Ukraine and Russia, Europe is probably bracing themselves again. I haven't followed it too closely, so you might, think otherwise. But curious your thoughts there.
Yeah, I think if we, from a political front, if we can see the advantages that mining brings, right? This is a way for energy producers to generate revenue, right? To expand into renewables, right? So that this is a way to, number one, balance the grid and help to expand in a green way, right? So they can put out more solar panels, they can do wind farms and so on to help generate energy. But right now that's very capital intensive as well. And one way to generate additional revenue is for these energy companies to actually do mining themselves.
Yeah, absolutely. And I think that
Yeah.
question of politics and the integration of renewable energy, I think these renewable energy producers are almost going to start crowding each other out of that market, and they're going to need Bitcoin more and more as they have to curtail more and more. I think it's like the grid is just going to become more and more volatile, and that's going to just highlight continually why Bitcoin mining as this flexible load on the grid is so unique. And to kind of bring it back to this AI piece, it highlights why other users of energy can't supply that function as efficiently.
Well, yeah, look what happened in Texas in August. I think they're the hottest heat, hottest record heat, right? But I don't remember hearing any outages, any retail outages, or any businesses being out. Why? Because a lot of Bitcoin miners have curtailed to give the energy back to grids to supply retailers, right? So that's it's a perfect way of balancing the grid. I think other states should adopt the same type of policies, right? To kind of embrace the miners, right, and encourage them to come to their states to do the same thing.
Hmm. I mean, I certainly agree. I'm again perhaps a little bit biased, but yeah, I certainly see the benefit. And I guess I would just kind of kind of wrap this interview up and just give you an opportunity to talk about why is it that you're so involved in Bitcoin mining and Bitcoin generally? Like obviously working with somebody like Adam Back who was just so instrumental in the creation of Bitcoin. We just had Bitcoin white paper day. It's, I'm sure it's very cool to see his name on there. But yeah, can you just talk about like, why is this industry important? Like why this kind of thing matters?
Well, I think any kind of disruption is good, right? Because if you're not changing, you're dying, right? So you're not advancing. So I think Bitcoin is the technology around Bitcoin and the blockchain. I think is a way to advance technology, and also I like the decentralization part of it, right? And taking less control away from the government and the big banks, quite frankly. So and I see Bitcoin as a way to do it.
Yeah, absolutely. I think I mean, I kind of mentioned this before, where we have this kind of bipolar Bitcoin market where it's either it's so over or we're so back. I almost see the same thing with the traditional financial markets, where either we're going to see massive money printing or really sharp deflation. And I think Bitcoin just provides the perfect response to both of those scenarios, limiting both counterparty risk, but also protection from debasement of a currency. So, I mean, I've never felt like the value prop of Bitcoin has become more clear. And like you said before, that education piece is, I think, really coming to the fore. There's kind of a benefit of not being consumer facing as far as, AI. I think they're going to be kind of the tall nail that gets the hammer, maybe in terms of regulation, just because there's so much more visibility. But yeah, I think overall, like, things are trending quite well, and I think people are picking it up.
I think if you put $1 away under your pillow today, and if you had a physical Bitcoin, you can put it, you can put it on a thumb drive, right? And you put it on your pillow, and you wake up 10 years from now, you see which one is going to be worth more. There's not a question, not a question, right? With the amount of the amount of money printing that this country does, and the inflation that is creating, I think there needs to be another store of wealth.
Yeah, I mean, again, that's the problem with this political currency system. As Luke Broyles has said, I've spoken with him, and I love that turn of phrase. I think it's just highlights how it's just an instrument of politics, and therefore is not going to be optimal. Like, whether or not you agree with certain policies, I think at a certain point, it's not a great way to allocate capital in a society. I think people are beginning to see that. I mean, these deficits are out of control, and austerity is not an option. Like, you're not going to get reelected if you don't give people their benefits, and so it's just a matter of fact.
And I think as we create more liquidity around it, right? Like even with what Lightning does in our liquid product, right? We're digitizing assets, leveraging the blockchain. I think greater adoption there is going to be a huge benefit as well.
Certainly, yeah. It's been super cool to see all the building in the bear market. I know something like BitVM, which is like miles over my head. It sounds like there's some really novel things coming to Bitcoin that could really, just bring liquidity into the space. Like, liquidity begets liquidity, and as a monetary good, that's what Bitcoin needs to see. So certainly very exciting. And is there anything else you want to leave us with as far as like things that we can look forward to from Blockstream, or any hot takes you have on maybe the halving of the spot ETF? But I think we've covered plenty of ground here.
Yeah, no, I think we're continuously looking at derivative products, that we could spin up in our financial practice, similar to the basic note and the BMN. So I think in the future you probably see more of those. Just wanted to reiterate that we'll be opening up the Series 2 of the basic note. And if anybody wants to reach out, you can go to the Stoker site, or you can come directly to me at jmacedonio@blockstream.com, or just go to our site. But yeah.
Yeah, well, I know we just had Halloween a couple of days ago, and I think some people were expecting maybe a scary conversation about the halving in the Bitcoin mining industry, but I think you've got me feeling rather bullish on certain aspects of it. So appreciate you lightening the mood a bit. So James, really appreciate you taking the time to chat with us today. I think I myself am super excited to see what happens with this ASIC rig that you guys are releasing next year. I think that's going to be sweet. But yeah, I think that's all I got for you. And again, feel free to come on anytime.
Yeah, thank you, Spencer, for the opportunity.
Of course. Talk soon.
All right. Thanks so long.
Peace.